So it's a real pleasure to introduce David Schwimmer, CEO of the London Stock Exchange Group and a member of the board of the group. David joined the London Stock Exchange Group in 2018 after having spent 20 years at Goldman Sachs in a number of different senior roles, most recently as Global Head of Market Structure and Global Head of Metals and Mining. David also served as Chief of Staff to Lloyd Blankfein, then President and CEO of Goldman. And he spent 3 years in Russia as co-head of Russia's CIS. Before that, David practiced law at Davis Polk and Wardwell. He holds a BA from Yale University and postgraduate degrees in law and international affairs from Harvard University and the Fletcher School of Law. David, we are absolutely delighted to welcome you back to the Financial Markets Quality Conference at the Georgetown Passaro Center for Financial Markets and Policy. We're going to start with some remarks by David, and then we'll do a little Q&A, and then we'll open it up to questions. David.
Reena, thank you very much for the introduction. Thank you for having me. And it is great to be back at the Passaro Center, and it's great to see Mike here in the audience. Thank you for making today's event possible. As I look back on the last few years, it's clear that it has been a challenging time for financial markets and the world. The pandemic, war in the Middle East, war in Europe, concerns about inflation and the cost of living, threats to democracy. But it's in these moments of uncertainty that the work of great institutions like the Passaro Center proves invaluable. Bringing together market participants and policymakers, bridging the gap between practice and policy, engaging with, informing, and learning from the next generation. These are all vital endeavors that help to safeguard the health of our financial markets, especially in today's environment. We're experiencing a number of paradigm shifts in very short order. Some of these are genuinely new for the world, like dealing with dramatic technological advancements and addressing the challenge of climate change. Other shifts, like the changes in monetary policy and geopolitics, while very challenging, are in many ways a return to normal. To be clear, normal doesn't mean the past 20 years. The extraordinary support from central banks over the last 15 to 20 years has not been normal. The negative interest rates we've seen in many markets have not been normal. But if you look back to the 1990s and before, the interest rates we're seeing today are not unusual. A mortgage rate of 5 or 7% was not cause for shock and alarm. In terms of the geopolitical landscape, for the last 20 years, we have benefited from a historically unusual alignment in favor of globalization and economic cooperation among countries that were historically rivals or even enemies. Today, we're seeing a breakdown in that alignment, geopolitical fragmentation, and a return to what I suggest are more historically normal tensions. And at the same time, we're seeing shifting paradigms in technology. AI is transforming the world that we live in. In this environment, at LSEG, we don't try to predict the future, but we do a lot of scenario planning, and we try to prepare for whatever may come. This has been a necessity. LSEG today is much more than our stock exchange in London. We are a leading global provider of financial markets infrastructure, data, and analytics. We're the world's #1 real-time data business, the leading global provider of Know Your Customer and anti-money laundering background check information, a leading index provider, and our clearinghouse is super systemic, helping banks and their clients all over the world hedging their risk. And while we are headquartered in London, we operate in every major financial center with 23,000 people serving 45,000 customers in 190 markets. So we're very focused on enhancing the efficiency and resilience of the world's financial markets. And there are a few key trends that we have been looking at very closely. The rise of AI, the fragmentation of the digital economy, and the growth of private markets. Each poses potential risks, but if we approach each of these issues the right way, we can address challenges, seize opportunities, and strengthen global markets. So let's start with the topic that is getting an enormous amount of attention these days, AI. We've seen fast-moving advances in this space over the last year, especially with regard to generative AI. And while we have been using AI and machine learning in our business for a while, generative AI is leading to a step change in the financial world. We're building AI functionality into our platforms and workflow to enhance customer productivity, creating more valuable insights through proprietary analytics. And we can use the vast amount of data that we ingest and manage to inform and prompt or train large language models for targeted use cases in our sector. It's great to see the progress being made with this technology, but as we are building AI-powered solutions, we're also thinking about the risks that AI poses in our industry. AI hallucination, or the idea that AI may perceive non-existent patterns and produce inaccurate outputs, raises very serious questions for financial services. AI can enable you to make the same mistakes you would have made before, but with even greater confidence. LLMs built on questionable or inaccurate data sourced from the internet are not good enough. Our industry relies on pinpoint accuracy. If I were to tell our customers that our data and analytics were 95% accurate, that's simply not good enough. So we're very focused on using AI responsibly. Specifically, we're focused on meeting two key conditions in the use of AI. One, we are ensuring the quality of our data, cleaning and codifying it to be accurate and reliable, and drawing on our decades of experience in data management to ensure that it is internally consistent. Two, we're ensuring the integrity and lineage of our model inputs. We're building auditability into our AI-enabled products so that our customers can easily verify the source of information. Meeting these conditions is critical for the responsible use of AI and will be central to our approach as we leverage the depth and breadth of our data to meet our customers' needs. The second trend that we've been watching carefully, and frankly with concern, is the increasing focus on data sovereignty and the challenges to free flows of data across borders. Many of you are familiar with how the current geopolitical climate has put the open global economy at risk. But this is especially true when it comes to the digital economy. Governments around the world are asserting greater data sovereignty through laws and regulations that are threatening to fragment the world's open data ecosystem. And this could have a very negative effect. The digital economy drives innovation, empowering businesses and communities to create solutions for society's greatest challenges. Cross-border data flows already underpin how we all live and work, from booking hotel rooms and flights to tackling cyber and financial crime. And they facilitate the orderly and efficient operation of financial markets, including our global trading platforms. So the fragmentation that we are seeing is no small threat. Data localization, which requires the storage and processing of data inside the country of collection, is already undermining efforts to enhance international data flows. And estimates show such data flow restrictions could lower the GDP of some countries by 0.5% up to 2%. It doesn't have to be this way. Governments can and must come together to advance international cooperation and trust on digital governance issues. We should have a coordinated global effort to ensure that cross-border data flows can be used safely to drive innovation and growth. Some countries are leading the way on this with bilateral agreements, such as the US-UK Data Bridge. But we need multilateral versions of these, perhaps starting among relatively like-minded groups like the G7. The third major trend that we've been looking at has been the growth of private markets that was brought about by 2 decades of abnormally low interest rates. Cheap capital has pushed the total AUM of private markets to a gargantuan $11 trillion. And as the interest rate cycle shifts and capital becomes more expensive, there is change coming to this opaque, illiquid, and occasionally highly leveraged part of the markets. At LSEG, we've been looking at a few options to bring more transparency and liquidity to this space. And we're now creating the world's first regulated crossover market. Our intermittent trading venue will allow private companies to periodically provide new and existing shareholders with the opportunity to transact through the controlled and efficient mechanism of a stock exchange auction and public trading functionality. So under this construct, a private company can notify the market on what date it will be available for public trading. It will put out a disclosure document in advance of that date. For the designated window, it will be effectively traded using public market infrastructure. And then it will go back to being a private company. It can choose to return to this mechanism periodically after that. This will create more of a continuum between private and public companies. It will help early-stage investors recycle their capital. Employees realize the value of their shares, and companies reduce the costs of providing shareholders with liquidity. And it will give investors access to a broader universe of companies. So, responsible use of AI in financial markets, free flow of data across borders, and facilitating liquidity in the private markets. These are three areas where LSEG is driving change in the markets. The world is in a difficult period economically and geopolitically. As stakeholders in the world's financial markets, we must work together to overcome potential challenges and continue to innovate and improve, making markets better, more flexible, and more resilient so that they can succeed in their critical role as efficient allocators of capital. By adopting a global mindset and relying on transparency and trust, we at LSEG are doing what we can to ensure that our financial system is robust, secure, and competitive, and ready to take on whatever tomorrow brings. Thank you.
Okay. Thank you, David, for those remarks. So just sort of following up on some of the things you talked about, I've been involved with FTSE Russell for a long time now, having served on your academic advisory committee. And it's fascinating to see how LSEG has transformed under your leadership in the last 5 years, right? You were about 5,000 employees at that time. Now you have 20,000 employees. And so let me start by asking, and you as you said, you have 45,000 clients, if I got that right, and around 190 countries. So in this world with all the geopolitics and uncertainty, how are you managing? Where are your people? How are you managing that?
So, again, thank you, Reena, for having me here. It's great to be here. We are all over the world. We are a global business, and that's part of our value proposition to our customers. But it is also part of the risk that we manage as a company. Over half of our people are in Asia, actually. And we do feel all of the geopolitical events that are happening. So we have about 1,500 people in Sri Lanka. Sri Lanka has had a tough stretch over the last couple of years with economic crisis. We have people in Ukraine. We still have people in Ukraine today who continue to work and are doing a terrific job for us. We have about 100 people in Israel. We have people all around the region in Jordan and Egypt and Lebanon. So it's important to us to be global. It's important to our customers that we're global. But it is also something that we manage as a company. In other words, we have to think about and be focused on operational resilience in everything that we do because we are systemic market infrastructure and our customers rely on us to conduct their daily business. So we do a lot of scenario planning. We have a lot of backup plans. We have a lot of redundancy built into our systems. And it works. It's not always easy, but it's built into our DNA in terms of how we try to operate.
So what exactly does LSEG do? It's fascinating to watch how exchanges around the world, including ICE and New York and NASDAQ, and you have transformed So what are your major lines of business now?
So it is always surprising for people when I tell them. We're known, of course, for being the London Stock Exchange, and it's a great part of the business. It's a great part of our heritage. It's been around for 300 years as a driver of innovation for those 300 years, and it continues to be. It's also a great business. It's 3% of our revenues. So what do? We have data and analytics as the biggest part of our business. And all in our different data businesses and analytics businesses, including the FTSE Russell Index business, including our what we call risk intelligence. So we're the provider of probably the leading content set for background checks and anti-money laundering checks called World Check. So put all those together, that's about 70% of our revenue. And then we have, in addition to equity trading on the stock exchange, we have the leading execution venues for foreign exchange trading. And we also are the controlling shareholder. We have majority stake in a business called Tradeweb, which is probably the leading fixed income electronic execution venue based in New York. It's a public company in its own right. And then, so our data and analytics, our capital markets execution venues. Then we have a post-trade business, post-trade division, which is mostly London Clearing House, LCH, which is one of the world's most systemic institutions, where we provide clearing in a number of different asset classes, but most prominently interest rate swaps, which are the largest traded derivative asset class. And that we're regulated in 21 jurisdictions, serving banks all over the world. We're the largest counterparty for most banks because of the clearinghouse. So those are the big legs of the stool, if I can describe it that way.
So just picking up, you're operating in so many countries. Here we are, the Georgetown Purcell Center for Financial Markets and Policy. How do you manage around all these regulations around the world? Every country seems to have different rules and regulations. How does your organization manage that?
So it's really interesting. From our perspective, we view being regulated and dealing with regulators as a core competency. And it's really important to us, and it's something that I would almost describe as a secret weapon, because we work closely with regulators. We take great pride in having good relationships with regulators. I know there are lots of industries or institutions that are either wary of regulation or actually hostile to regulation. That's not our approach. And we work closely with regulators and really try to be helpful and try to contribute and try to help shape the dialogue where appropriate, provide data, information where appropriate. And I think it's an important part of our value proposition to our customers in that a lot of the content that we bring, a lot of the subject matter expertise that we have, and a lot of the products that we create and offer help them deal with the regulatory environment. So just to give one example, Fundamental Review of the Trading Book, FRTB, viewed as a fairly onerous regulatory requirement for basically, for those of you not familiar with it, it basically means that the more opaque the positions you have on your bank balance sheet, the more capital you have to hold against those positions. And what we have done is pulled together data from different parts of our business, including Tradeweb, including YieldBook, our fixed income analytics, and including LCH, where we have curve data on a lot of very opaque over-the-counter derivatives, to provide a very high quality, unusual product that allows banks to get much greater information and transparency about how to price certain parts of their balance sheet and therefore hold less capital against those positions and be much more efficient. Well, so that's just an example.
That's fascinating. So you're monetizing data in very unique, value-added ways, right?
In a way that helps our customers deal with regulation in a constructive way.
Right. Yeah. Yeah. I was fascinated listening to you about the private markets and what you're doing there. That's so novel and unique. Are there any regulatory issues there?
Yes.
Tons of them, right?
Yes, absolutely. So we're ready to go. We're ready to launch that, and we are. I say this politely. We are waiting for regulatory approval from the FCA, and they're working diligently to get that for us. So once we have that regulatory approval, we will launch that capability. So the use of the public market trading infrastructure is something that we have to obviously be very, very careful about and be thoughtful about who gets access to that. So do we make it open to all of the markets? Do we make it open to what here are referred to as accredited investors? So we're just working through that from a regulatory perspective.
And initially, this is going to be just for private companies in your part of the world, or is this going to be global? Or?
Well, the aspiration is to make it accessible to private companies all over the world. We may have an initial stage where there has to be some nexus with the UK, but we'll see how that plays out from a regulatory perspective.
Okay, fantastic. You've done a number of acquisitions in the last few years. You've come up with partnerships. I'm curious to hear a little bit about the Microsoft partnership.
So we announced in December of last year that a long-term strategic partnership with Microsoft. And as part of that, Microsoft took a 4% stake in LSEG, which is something I don't think they've ever done that before. And Scott Guthrie, who's Microsoft's head of cloud and AI, has joined our board. So it's a really interesting partnership in terms of the products that we're building together, but also has these structural elements in terms of the board membership and the ownership stake. What are we doing from a product perspective? There are a few different areas where we're building product together. One is that we are embedding our data and analytics and desktop platform into Microsoft 365. So if you think about a typical financial sector desktop terminal, and you think about PowerPoint and Excel and Teams, merge those and think about having the interoperable functionality of all of our data and analytics in the really, frankly, easy customer user interface of a Teams environment, and single sign-on, and instead of copying and pasting from over here into your Excel model, you can pull it right in. And PowerPoint presentations that update automatically with our data. And so that's one part. And that's the part that's gotten the most focus because it's so tangible. But there are other things that we're building as well. We're moving we have vast amount of data across what has historically been built up as 48, or depending on how you count, more data sets, databases. And we're moving that into an integrated architecture within the cloud environment of Microsoft, which will make it much easier for our customers to access the data, manipulate the data, commingle their data with our data. And then we're also building a modeling infrastructure. It's effectively an app store for analytics or models, where with the combination of our data and our models and the Microsoft cloud environment, we will make our models available for anyone who wants to use them, effectively rent our models. But more interesting than that is that others can use our infrastructure to put their models into this infrastructure or access other models for the infrastructure. So that's what I mean by it's effectively an app store for models.
You know, this is going to be fascinating to see whether other technology companies start taking equity stakes in other exchanges or financial firms. To some extent, I guess it's already happening where exchanges, the so-called exchanges, are acquiring technology companies.
There's an important convergence going on here. I think the big tech companies, the cloud companies, are unlikely to want to move into areas where they will be regulated from a financial sector perspective. But if you think about that as sort of a bright line, beyond that, I think you're seeing a massive convergence of, our business is basically market infrastructure, so the plumbing that makes the markets work, information services, and technology integrating. And that's the direction of travel for our customers. And so in order for us to be helpful for them and, frankly, helpful in driving the change in the industry, that kind of integration is what we're doing.
Fantastic. I look forward to seeing what happens over the years, but there's a real transformation going on here. I have tons of questions to ask you, but I know we have questions from the audience, so we have time for 1 or 2 questions here, and I'm going to ask our students to come up first and ask questions, please. So can we have the students line up first, and then happy to open it up to others. We only have time for like 1 or 2 questions.
Hi, David. Thank you so much for your time today. My name is Lara, and I'm a master's student here at MSV. I heard you say recently in a CNBC interview that you believe that London will remain the main exchange in the European financial markets. After Brexit, there was a lot of talk that Paris or Frankfurt will become the next center. So I wonder if you could expand a little on that and share your thoughts with us. Thank you.
Sure. This is a topic that's gotten a lot of focus, and there's been a lot of interest in and sort of curiosity about London after Brexit. Fact of the matter is that London continues to remain by far the leading financial center in Europe and one of the world's leading financial centers. And I say this, I'm a New Yorker. Our business, as we were talking about, is global, and we operate in every major financial center. So on one hand, it's a little bit funny that I find myself in this position of talking about London as a leading international financial center, but it is. I think the kind of communication about other cities, in many ways, it's healthy if there's a diversification of capital markets activity across geographies. In the US, you have New York and you have Chicago. And the New York Stock Exchange is owned by a company based in Atlanta. So I think Europe was unusually concentrated in terms of capital markets activity in London. Having said that, London continues to, the stock exchange is by far the most international capital destination in Europe. And in terms of listings or capital raised, we're, again, by far ahead of the other European exchanges. The IPO market goes up and down. IPO window opens and closes, and that always gets a lot of attention from the media. But when you sort of strip all of that away, London continues to be Europe's leading financial center. So, but there will continue to be focus on it and questions about it because people like to focus on, what's the impact of Brexit.
Sure. A last question from Pavlos.
Yes, hi. I'm Pavlos. I'm a sophomore at the business school. Thank you so much for coming. You mentioned that the financial industry overall and the financial markets are changing drastically and very quickly. I was hoping you could talk more about, what skills or different coursework potentially that students like me can take in order to progress in this new context. Thank you.
So, probably the first thing to remember in the context of a question like that is the breadth of the financial sector. There's so many different skills that are necessary in this sector. And so the most important thing is to find what you are passionate about and what you're really excited about. Because if you're spending time in an area you're not that excited about, that'll just be painful as opposed to exciting. And this is a great sector if you're excited about it and passionate about what you're doing. I would say we see a lot of focus these days on data science, computer science broadly, coding. We're in an environment now where many traders know how to code. And that's really different from the world I grew up in. So that just gives you a sort of a sample or a taste. But there's a huge range of capabilities and skills that are necessary in this industry. So find what you're really passionate about.
David, we are so appreciative. You flew in last night to be here with us today, and you're flying back tonight. Thank you so much. We really appreciate it. Please join me in thanking David Schwimmer.
Thank you.